Hi guys, welcome back to Exang Yung, and in this video I'll talk about an example of property in Singapore and how it exactly makes money. So previously I talked about property in my last video. It's all about it's a kind of like a theory and telling that when you buy and then you rent it out to tenants, and since the tenants pays you the rental, and the rental consists of paying off the mortgage, property tax, and management fee. So then this mortgage, right, this mortgage component that you pay to the bank is actually divided into the interest and the principal payment. So now I'm going to show you a real example, a real life example of this property. Yeah, I'm not here for quite a while because I got sick of dengue, and thankfully I'm okay. So yeah, let's get right into the video. I'll need to use this to help me. Okay, so first thing first, the commercial property is $1 million, okay, Singapore dollars, and the property size is 2,500 square feet. Okay, so if you are an investor, of course you should know that 1 million you divided by 2,500 square feet means the price per square foot of this property is 400 price per square foot PSF, 400 PSF. Okay, now if you're able to get a 90% down payment, okay, from the bank, meaning that 90%, 900,000 is loaned from the bank, and only a 10% deposit is needed, which is 100,000, right? So since my age, since I'm young, right, I'm only in my 20s, I can get a maximum tenure of 30 years. So a 30-year loan from the bank at 2.4% interest per annum. Okay, so this is the what the bank charges, 2.4% interest in Singapore. Then this would add up to $3,500 mortgage payment per month. Every month you have to pay the bank $3,500 as the mortgage for a $1 million property. Okay, so if you are able to get a rental of just $2 per square feet, which is very cheap, right, in the grand scheme of office rental. So $2 per square feet times 2,500 square feet of space, you would actually get a number of 5,000, right? 2,500 times $2 to $5,000. So that's your rental, right? So now for this $1 million property, we have the rental of $5,000. So you have to minus your expenses. Okay, so the largest expense is of course the mortgage. This is the where the bank loans you the 900,000. So you need to service this mortgage of $3,500, as stated before. Then we also have to minus the management fee. So the management fee for this property is around $500. So you minus that $500 for management fee. So what is management fee? They have to manage the property, all those common spaces like the lifts, you know, you have to keep maintain it, right? Okay, let's go back. Now you have to minus the last expense would be the property tax. So since this is a buying and selling transaction and people are renting, you know, tenants are staying inside, so this is taxable by the government, and the government is usually around 10% of the actual rental of the property. So it's actually the annual rental. So since you divide it into 12 months, it'll be just the same, 10%. So it's 10% of $5,000 is $500 also. So if you do your math, $5,000 minus $3,500 minus $500 of management fee minus $500 of property tax, you would actually get an extra $500, right? So this $500 is actually your positive cash flow. This is the cash flow that you get extra every month. So it's considered passive. but it doesn't sound that much, right? Since you put in $100,000 into this property and you're only getting $500 every month. Doesn't sound like a very good proposition. However, let me tell you the magic of this, okay? Remember the mortgage thing, the one we paid to the bank? So since the rental is paid fully by the tenant, $5,000 is from the tenant. Now the mortgage has two portions, right? Remember? The interest and the principal. So the interest portion is the one that we pay to the bank, since it's what they charge for letting us borrow the money, 2.4% per annum, right? So the interest portion turns out to be $1,700. Okay, so that'll be gone. So $3,500 minus $1,700 of interest, okay, you are left with $1,800, right? So that portion, that principal, $1,800 is actually yours, yours as the landlord, as the owner to take, but it's kept by the bank. So remember, you borrowed $900,000 as a loan, so the principal is actually you paying that loan down. Okay, so 1 year you paying the principal of 1,008, so the principal will be going down a bit. Calculate a bit, I forget to calculate the annual value of per year. So 1,800 times so per year you are actually saving this amount, 21,600. Why I say you are actually getting this amount of money? Because when you pay to the bank, okay, the bank pays down your loan, you can actually refinance that amount out. 1. 2, when you sell the property, you can actually gain that amount out. You can actually take it out when you sell the property, because it's payment made to your principal, means it's your money, right? It's just money in the bank, money into your pocket, but you cannot touch it unless you refinance or sell your property. So it turns out to be, right, you are getting from this property total of monthly, total of 1,800, right? You plus the $500, you are getting $2,300 per month, right? $2,300 is like a person's salary in Singapore. Okay, so that's a lot, that's a huge amount. So that's only one property. So what if you buy many properties, right? Then you can start to scale up, and the more properties you buy, the larger the amount of risk that you are taking, because you are actually taking a loan, right? You are borrowing money from the bank, but you're also taking a larger amount of upside potential of passive income, potential of capital appreciation, all those kind of good stuff, right? So yeah, that's how you make money from property. It's quite simple actually, but you really need to learn and start to understand the location, the numbers, and how to calculate these kind of things. And I really suggest you guys to join like property classes, not the real estate agent types, but those investors trying to buy the property themselves. Yeah, so I joined the iQuadrant, so this is a free just referral to them, because they are very good in teaching and doing and what they are doing right now, which is educating the public, and I think the cost is worth it. And hope you guys subscribe to X and Yung if you want to know more videos like this to improve your financial knowledge, because I know most people don't get taught financial knowledge in high school or primary school, right? So just join our video, please subscribe, press that like button if you find this enjoying, because it really takes a lot of hard work to make this video. Hi guys, before you go, there's a video here, right here. I'll put the video here talking about the theory on how property makes you money, right? So you have to understand that amount, like remember the principal, the interest, and why that principal is actually your money, since the tenant pays you rental. So you can click on this video here, and yeah, that's it. Thank you. See you guys next week.